Hey everybody, Mo here. Today we're talking about big changes that could be coming to the Florida market. All 4 of the MSOs we cover on the show participate in that market, so we'll be taking a look at exactly what that means. Also, Vermont has released plans on what their recreational market is going to look like. Then we'll talk about some of the more interesting answers from Curaleaf Chairman Boris Jordan's AMA, and a couple of other things as well. Welcome to the Saturday, October 30th edition of Mary Jane Markets. This is a show covering the developing news of the North American cannabis sector every Monday, Wednesday, and Friday, or thereabouts. Also cover a few of the operators: Cresco Labs, Curaleaf, Thumb Industries, and Trulieve. The goal here is to do all of the due diligence I normally do as an investor in these companies, and then provide that to you in a concise episode so you can stay updated. First up on the docket to talk about today is Florida's Department of Health seeking to prepare themselves ahead of big changes coming to the state's program. For their upcoming budget, they're asking for an additional $20 million to more than double the workforce in the OMMU, which oversees certain aspects of Florida's medical cannabis market. They want to increase headcount there to 165 employees from 80. They're also going to use some of that money to open 3 more OMMU offices, publicize accurate information. You guys have probably all seen those updates that come out every Friday, and also for litigation-related expenses. And the reasons for this are where things get interesting. So by law, as part of Florida's program, they must continue to increase MMTC licenses as patient counts increase. That acronym MMTC stands for Medical Mary Jane Treatment Centers, which are vertically integrated businesses that can operate in the state. Currently, there are only 22 of them, while patient count has increased to more than 628,000 Floridians in the program. And according to the law, there should be 41 by now. So to adhere to that, the OMMU is planning to award 19 new licenses by July 1st, 2022, and then an additional 8 by July 1st, 2023. So by mid-2023, that will put them at 49 total. Remember, those are 49 operators, not dispensaries. There are a lot more dispensaries in the state. So this is very, very bullish news. One, the government is leaning into this industry and not shying away from it. Those of you who have been listening to my show, even over just the short time I've been making these videos, have seen just how big an impact the local government can make on the state's industry. 2, the government is expecting huge growth in the patient count in those next 2 years. The OMMU is projecting a 900,000 plus patient base by the time they roll out these licenses. That's about a 50% increase in patient count from today. As an investor, you're probably thinking, what does that mean in dollar terms? Well, that's the $7 billion question. I want to take a minute to think about that with you. So the Washington Examiner here is throwing a few different numbers at us. Sales in 2020 were about $1.23 billion. That is a known data point. And they cite ArcView Market Research here, which projects that Florida could get to $6 billion in sales by 2030. I really don't like how this paragraph is written. It starts with Florida's medical industry's sales and then ends with this $6 billion figure. I think in this form, the way that this reads, or the way that it could be interpreted by readers, is by 2030, the medical market is projected to reach $6 billion in sales. If we jump over to my market landscape spreadsheet, you can see that I estimated the potential total market in that state to be approximately $7.8 billion. That includes the currently illicit recreational market in the state. So I think ArcView's $6 billion figure here refers to the full market, assuming recreational comes online and ramps by then, which most people I think would agree is a fair assumption. But just to be sure, I took this 6 billion and divided by 2,700, which is my estimated yearly patient spend. And that tells me that in order for this to be yearly sales in the medical market, there would have to be more than 2.2 million Floridians in the state program. The state's population is around 22 million people, meaning 10% of the state would have to be in the program for that number to represent the state's medical industry. You take into account falling prices by 2030, and that pushes the patient count and that percent even higher. And that doesn't seem realistic to me. I could be wrong. I will happily be wrong about this. The bigger the market is, the more money I'll make as an investor. Like if there's wider acceptance among the medical community for prescribing this for a broader number of conditions, there is always that optionality to the upside. The other set of figures the Washington Examiner throws at us are from the 2021 MJBiz Factbook, which projects 2021 sales to approach 1.3 billion and near 2 billion by 2025. So we know last year the state's sales were around $1.23 billion. If you want to look at the OMMU update from this time last year, they had 435,000 patients registered and were selling about 48,000 ounces that week. Spring forward to this year, we're at 628,000 patients and 79,000 ounces. I mean, word out of the state is that prices are decreasing, but enough to offset a 64% increase in unit sales year over year? I highly doubt that. This, guys, is the whole reason we have to do our own due diligence and not outsource our critical thinking to other people. It's why I've consciously styled my show in a manner to present the information to you and let you do that. And of course, I'm sharing my own thought process and opinions along the way, and hopefully that process is rational and logical and helps more than distracts from the topic. I don't want this to be a robotic news script that I'm reading. I want it to be more like a conversation between us. Albeit I'm doing most of the talking, but a good amount of you are engaging with me in the comments and on Twitter, so thank you for that. I think this sector brings together two really amazing communities, and I hope to build some of that around me with this channel and converse with you all more. A couple of things on Vermont's market I wanted to brief you on. I doubt this is a state we're going to be talking much about. Vermont, in terms of GDP, ranks dead last, making up less than 0.2% of the US economy. However, they've made rather interesting decisions on what their recreational market is going to look like come October of 2022. Yet another example of why we have to pay attention to government policies in this state, as I was alluding to earlier. Even though it's a small market, I think it's worth going through the exercise of examining it. We're going to look at two things here. One is an article from Vermont Public Radio, and the other is the Vermont Cannabis Control Board's October report. So not sure why VPR decided to write it this way, but this is written like an interview, even though the interview is a senior political correspondent at VPR. So one of the main characteristics of Vermont's market is their decision to prioritize small growers and operators. So they're estimating that to fulfill the state's demand for recreational, somewhere between 400 and 500,000 square feet of cultivation space is needed. And then they want to create different types or tiers of licenses that would allow the holder to have up to a certain amount of square footage of canopy space. So for example, the first tier would allow you to grow up to 1,000 square feet. Tier 2 would be 2,500, Tier 3, 5,000, and so on. So one of the ways that they're favoring those smaller operators is to start awarding those Tier 1 licenses first, see what the appetite for those is like, and then move on to Tier 2, and then so on. So 1,000 square feet of grow space is really, really small. The interviewee gives a nice way to visualize that in your head. So imagine the size of a basketball court and then cut that in half. Now take that half court and cut that in half. So that quarter of a basketball court is roughly 1,000 square feet. The other way that they're favoring small operators is by only allowing a single type of license to be held by a company. So if you're a company in Vermont, you have to choose between having a cultivation license or a retail license. And then that retail license works similarly. If you have one license, you're only allowed to have one dispensary. Can you guys think of a worse way to set this program up? Is that going to be enough to entice somebody to venture out, take this risk, start a business, and make enough money to support themselves or their family? You're going to be crippling them. I mean, not only does this design cap how much somebody can make, it also incentivizes people to stay out of their program, because the longer they wait, the higher up that tier list that the government is going to move, and the more money you can make as an operator. I have a feeling that those first movers are going to feel really screwed when the state starts awarding those Tier 5, Tier 6 licenses that lets those operators grow 20 to 37 more times more product than them. Their margins are going to be a lot worse than those bigger guys. They'll be disadvantaged because the bigger players have economies of scale, better capitalization, a lower hurdle rate. All of that allows larger operators to set lower prices and box out smaller operators that can't afford to compete in the market. I'll stop there. I know what they're trying to do, and best of luck to them. I hope there are 400 or 500 people out there in Vermont that can jump on it, satisfy demand in the state, and make a living. The other thing they say they want to do is create a welcoming regulatory environment to allow illicit market operators to convert themselves over to the legal market. I don't want to continue being negative about this, so I'm not going to state the obvious and just say good luck, Vermont. On the tax side, they say there's going to be a 14% state excise tax. So that's paid by the supply side, but usually flows through to consumers in the form of higher prices. And then there's going to be a 6% state sales tax with the option for the local government to add another 1 or 2% on top of that. So at the register, you're seeing around 6 to 8% sales tax, which is really good. As I'm recording this, I've decided to cut out the October report from Vermont's Cannabis Control Board. There is a lot of good information in here about Vermont's market and the proposed recommendations they're making for what this recreational program should look like. But because this market is so small, and to keep this episode at a reasonable length, we'll stop here. Your time can probably be better spent elsewhere than trying to squeeze out some insights from this, but I'll leave the link to this report below in the description. I also wanted to go over a couple things from Curaleaf Chairman Boris Johnson's Reddit AMA. I pointed this out on Wednesday, so maybe you've already seen it. So just a few things I wanted to highlight here. First being on interstate commerce. MedGrower420 asks what he thinks the timeline will be on that and how it will come. Boris replies that Curaleaf supports a phased introduction of interstate commerce over a number of years, which would allow the state's programs and federal regulation to prepare for the transition. It's very important that regulatory and enforcement infrastructure be in place to ensure that decriminalization brings the industry into the legal, regulated, and tested and taxed market. The result of decriminalization and interstate commerce should not be that 70% of the industry remains outside of the legal market. He goes on to say that ultimately the timeline is very undetermined. We don't believe this will happen in the short term, but theoretically it could. If the process were to go through Congress, we see this taking multiple years. Answering a related question by the same user, he also says, "It is our belief after having conversations with Senator Chuck Schumer's staff and Senators Wyden and Booker and their staff that they support interstate commerce with state regulation." So that with state regulation part that the senators support are exactly what I think Boris and Curaleaf here are saying in answer to the first question. Another one I wanted to highlight was on safe banking. This one asked by Reddit user Anon75 on his thoughts on when safe banking will pass. He says that there is a remote chance it could pass while it's attached to the NDAA. I think the Senate deadline for that is December. I remember reading about that, but I'm not quite sure what the exact date is. Anyway, Boris goes on to say here, and this is something he said multiple times, is, "We believe this will more likely pass in the first half of next year." Another one I wanted to highlight was from Green Door 805. They ask, outside of politics, what do you think is the biggest risk when investing in cannabis stocks? Boris's reply is, good question. The federal government, specifically the FDA, becoming overly involved in the industry. We saw what the FDA did to CBD, and that would be a negative to the industry. No change to the 280E tax legislation is also a risk. So the first part of that answer on the FDA, government policy is not a binary issue. This isn't all about them flipping the switch on recreational. Even after that happens, the government has a lot of power with the policies they set that could make or break this industry. I hope it was clear why we were looking at that stuff on Friday. I know we cover a lot of topics on this show, and I hope I'm putting the significance of them into context for you. I know that's one of the things that I need to get better on, but I pick and choose what I want to include in these episodes very carefully. So if there's ever anything that you don't quite understand, please ask follow-up questions. I read all of the comments. And we'll end with a feel-good one. One Strong Buckeyes asks here, what's the message to retail investors or prospective retail investors that see a 9-month declining trend in share price on low liquidity exchanges? Boris answers, the message here is, cannabis and Curaleaf are long-term plays in a new emerging industry. We are in the early stages of growth, and as such, volatility in the markets is par for the course. This is not a market for traders. This is a market for investors. Those that stay the course will be rewarded. Another thing to bring to your attention is this milestone in the harvest integration with Trulieve. We did touch briefly on this following the acquisition, and I think it's just another in a long line of examples of operational competence by Trulieve. Per Florida regulations, Trulieve was required to bring all 14 harvest dispensaries in the state under the Trulieve banner. Yesterday, within a month of the acquisition closing on October 1st, they announced that that was completed. So great job, Trulieve. Also, you may have seen these flurry of Form 4s filed by Trulieve yesterday. Looking through these, it looks like most are just corrections to when stock options granted to directors expire. So I don't think there's too much to go over or analyze there, but I just wanted to bring it up in case you were wondering what that was about. Alright, that is all for today. Thanks so much for listening. If you're liking the content, please remember to subscribe, turn on that notification bell so you don't miss any episodes. The best thing you can do to support the channel right now is to share it out with any like-minded investors or to forums where they might see it. If you want to reach out to me, the best place to do that is Twitter. My handle is @MJMarkets. Have a great weekend, and I'll talk to you on Monday.